Well, for more on Turkey's economy and the upcoming elections, let's bring in Saruhan Hatipoglu. He's the CEO of BERI and CGTN's Global Economics Analyst. Thank you for joining us.
Hi, Rachelle.
So let's start with the lira currency. We saw that on and off it's been declining for the last 5 years, but it's fallen about 17% since the start of this year. What is happening with the lira? How did it get to this point?
Well, it was a surprise because the Turkish economy grew over 7% in 2017, and some data showed that the economic growth was happening still in the first quarter. But I think it is less about the actual level of growth, but more about how the growth took place. If you look at infrastructure spending, construction boom in Turkey, debt-laden by corporations, and cheap credit has made this economic growth really, really high. But if you look at actual numbers, other data, inflation double digits, unemployment double digits, retail sales have been decelerating for the third month in a row. In Turkey, there's a current account of 5.5% of GDP, which is a huge number. And then you also look at corporate debt, which has exceeded at the gross level $300 billion US dollars, at the net level more than $200 billion. Investors are a little worried about this.
And is that the reason that we're seeing so much foreign capital leaving the country now?
Yes, part of it is that, but also there are better places to go. The United States, as we know, the interest rates are here increasing. 10-year exceeded the 3% level. And we're hearing from the Federal Reserve that this is going to continue. But also within emerging markets, there are better places. If you look at Mexico, Brazil, for example, two countries that have successfully reined in their current account deficit to 2% level. South Africa is a great example. During taper tantrum, their current account deficit was about 6%. And as soon as the tantrum happened, their currency lost 20% of the value. Now their current account deficit is about 3%. So there are better deals for investors. They're seeing these. And majority of these investors in Turkey are short-term portfolio investors. They can easily take their money and go elsewhere.
So then how important is it for these issues to be addressed before the elections coming up in June?
Nothing will happen before June. And this is why President Erdogan called the election earlier. The election was supposed to be in November. Many people don't like President Erdogan. I'm not a huge fan of him, but he's a shrewd politician. He knew where the economy is going or was going to go, and he called the early election. So there's his base still has not yet felt the dire economic consequences of the currency depreciation, as well as other not so good data like the inflation data and unemployment. But if we waited until November, I think that would have been a very close election. I think in June, it's not going to be that close. Probably closer than analysts are thinking it will be, but he'll still win.
So what can we glean about what's going to happen to Turkey's economy and potentially its financial tools once Erdogan gets re-elected?
I'm hoping that once he gets elected, the government is going to realize that, well, we don't need to do these populist measures anymore. We don't need to increase fiscal spending. We may leave the central bank alone, even though he said quite the opposite in the Bloomberg interview that you mentioned earlier. But I'm hoping that that will be the case, because this kind of imbalanced growth cannot go forever. And the problem with that is not only foreign investors leaving, but also the disparity within regions in Turkey is growing. And that's not a good recipe for an emerging market.
So what do you think should be the top economic or financial priority that Turkey should be addressing once the elections have passed?
Definitely the current account deficit. I've been worried about it when it hit 4.5%. We actually sent alerts to our clients that this is not sustainable. Like I mentioned, it's 5.5 going to 6% right now. And the corporate debt, the cheap credit needs to stop. Central bank has to increase interest rates. But unfortunately, the central bank is listening to President Erdogan. And if what he said in Bloomberg comes true once he's elected again, we're going to see more direct intervention in the central bank. And that's a terrible recipe, because the central bank actually wants to increase interest rate. They're realizing that the dollar strength is unstoppable, and something needs to happen. But we're going to see.
So just very quickly, if you're a foreign investor and you're looking at what's happening in Turkey, what would you advise them? Is it better to wait until after the elections to see how things play out?
It's hard to say. What we're saying, I can tell you what we're saying to our clients. In the short term, get out. If you have money in Turkey, get out for the 3 to 6 month period. But if you're a long-term investor, look, the country's public debt is still under 30% of GDP. There's a renewable energy industry in Turkey. That's one of the best in the world, probably the best in Europe. The wind capacity, geothermal energy is like that. So if foreign investor interest is in the long-term foreign direct investment, I would definitely encourage them to go into the renewable energy. But in terms of short-term, get into the MSCI Turkey shares, make money, that's no longer the case in Turkey. It's going to get worse before it gets better.
All right, thank you as always, Saruhan Hatipoglu, Global Economics Analyst and BERI CEO.